If you are watching this, you most likely want to know how to pass a prop firm challenge. In this video, I'm going to show you how you can stop blowing challenge after challenge and finally becoming a funded trader. So let's get right into the presentation. Quick interruption from me, guys. We have partnered up with BAM Funding and QuantTackle. We are giving away 2 prop firm challenge accounts to 2 lucky winners. Within this video, we will ask a certain question, answer the giveaway question to have a chance to win. So here we are, guys. This is the risk management protocol I myself use on a daily basis and also share with my community. And in this video, we will go through the challenge phase and how I manage my risk during the challenge phase and what I recommend as well. So obviously, with a FTMO challenge, you have certain rules and you have a 2-step challenge. So on a phase 1, you have the 10% target, and phase 2, 5% profit target. With both, you have 10% max drawdown and 5% daily loss limits. So these are the parameters we will work with. So why is risk management so important when it comes to prop firm challenges? So first of all, most of the time, people that are losing during the challenge phases are most likely just gambling through or don't really have an edge in the markets. So if you are not profitable yet, then everything I will say within this video is going to be useless for you. Why? Because you first of all have to become a profitable trader. If you don't have profitable strategy, we do teach free trading strategies in our public Discord community. You can join with the first link in the description and learn a profitable strategy first. But let's assume you do have a profitable edge in the market and you want to pass a prop firm challenge. First of all, what we want is we want to preserve our capital. We want to stay consistent with our risk and we want to control our emotions. So this is from the FTMO website, guys. You can look this up as well. This pretty much gives you the probability of seeing X amount of consecutive losses for a certain win rate percentage. And this is a sample of 50 trades. So let's assume you have a 50% win rate. So the probability of you seeing 2 consecutive losses is 100%. The probability of seeing 6 consecutive losses is 97%. So this is already a really high probability. And I'm gonna go in depth in a minute, explain why this is so crucial to risk management. Let's assume you have a 70% win rate. Let's say you are trading the gold beginner strategy or you are trading the manipulation model. You are within these 2 brackets right in here. So for you to have 10 losses consecutively is pretty much 0. And to have 5 is still 10% with 70% win rate and 1% with 80% win rate. So why is this so important? Because what I recommend is risking 1% per trade on the challenge. Why do I say that? Because first of all, if you haven't had a payout or you are a complete beginner to prop firms, but you know how to trade, then I recommend you to risk maximum 1% during the challenge phase. And this is for the phase 1 challenge. And on the phase 2, I would recommend you to cut that risk as well to 0.5 to 0.75. This way, you will not have emotional reactions. You don't feel any kind of doubt whatsoever that you are coming close to the drawdown limits whatsoever. And obviously, you have to have a high win rate strategy with lower risk reward. So for me, for example, it works really good with a 70 to 80% win rate combined with a 1 to 2 risk to reward ratio. So what I advise advanced traders is risk up to 2% on the first phase. Why do I say this? Some might feel that's way too much whatsoever, but in a position where you have had some payouts and you don't really depend on the money that you have invested into the challenge, you can be a little bit more aggressive. This is only for the first phase, guys. Because in the second phase, you only need 5%. It doesn't make sense to risk 2%. So in the second phase, I also cut my risk to 1% because that's the real deal. You're one step away from actually getting funded and making it to a potential payout. So if you are experienced, you had some payouts in the past and you know how the rules work and do have a profitable edge, then this is my recommendation for you. So just for beginners who don't know how to calculate the risk whatsoever, it's pretty simple. What you are going to do is whatever account size you have, you're going to multiply your account by the risk percentage and then divide it by your stop loss. So let's say you have a 100K account and you want to risk 1%, so 1K. On gold, you are going to enter a trade with a 50 pip stop loss. This means that you will have $1,000 divided by 50. And in the case of gold, you have to add another 0 to the pip amount. And that's how you get the 2 lot for your position size. So let's go over a few examples that you can resonate with. And the case studies that I have outlined in here, you have a trader A that risks 1% per setup and passes the evaluation phases, doesn't go into really deep drawdown whatsoever because he executes on only the valid setups and he doesn't go into tilt, doesn't rage whatsoever. Why? Because he knows the probabilities in trading and he is aware of his win rate and max losing streak. And that way he can go through the challenge phase in a calm way where he knows I will eventually pass the challenge. Why? Because he has a profitable strategy. Let's take a look at the failure story. Trader B risks 3% per trade, doesn't really have a clue what he's doing, just wants to gamble through. Or once he comes into drawdown, he doesn't stick to his strategy anymore. And this happens to a lot of us because in drawdown, we tend to change some things up. We tend to change a working strategy. We tend to risk more. We tend to trade more. And this is exactly where the prop firms profit, guys. So if you know why traders are failing, you can make the aftermath and look what you can change so you don't fall into that category of traders. And if you really have a strategy that works and it's really proven by data, then you won't change the strategy, won't hop on a different strategy at all. So this is really the key aspect that I found where most traders are failing. And one thing I have to say is stop gambling the news with prop firm challenges. Maybe it gets you through some challenges, but I've never done that in my prop firm journey. It doesn't really make sense. For me, as a professional trader, it is way more important to keep my mental capital and also my subconscious mind. And if I execute during high impact news events such as FOMC, NFP, CPI whatsoever, and do some kind of buy stop, sell stop whatsoever, what you see on YouTube with all those live streams, it won't get you far. Believe me that. It doesn't make any sense. Wait for the dust to settle and then execute on your strategy. To wrap this up, guys, it is very key to know your win rate. So you have to know the percentage of your wins and your losses. This way, you can calculate how many losses you can incur before blowing the challenge. So let me give you an example before wrapping this video up so you have a really clear understanding. So let's say you have a 60% win rate, and with the FTMO challenge, we know that you have a 10% max drawdown. This means if you are risking 1%, you can afford to lose 9 trades in a row, because on the 10th, you have blown the challenge. So let's look what's the probability of 9 losses in a row. So right here, the probability of 9 trades becoming losses is 0.4%. So it's extremely low. If you stick to your strategy, even with a 1-to-1 risk reward, you are profitable technically with this win rate, you will eventually pass a challenge. And exactly those losing streaks will break most traders. Don't let this happen to you. Be aware that you can incur a losing streak. After I have some winners in a row whatsoever, I always know the next loss is right around the corner. I prepare myself so I can accept the loss when it comes, or I can accept the losing streak when the losing streak hits. So that's why be aware of your win rate, your risk reward ratio, and don't try to full port challenge accounts. Maintain a solid risk percentage throughout the challenge phases, because I have already 6 figures in payouts from last year, so I can blow a challenge and it won't deter me at all. So what I do is I risk 2% on the phase 1 and then I risk 1% in phase 2. Even when I'm in drawdown, I will keep those risk percentages the same. Why? Because as I said, I know my win rate, and that's why I can risk that much. If your win rate is 20%, then you might have to change your strategy. Because in my honest opinion, prop firm trading is very, very sufficient with high win rate and lower risk reward ratio strategy. So for me, for example, I have throughout the year a 70 to 80% win rate with a 1 to 2 risk reward ratio. Yes, here and there, I do have some really good home runs, but I don't need them. And I also don't aim them, because the base hits you will have each and every day will count way, way more for your psychology and also your pocket. It's time for the giveaway question. What is your win rate? And from the table I showed you, what's the max losing streak you could incur before blowing a prop firm challenge? And also let me know if this video was helpful for you, and if you want to see a video where I pass a challenge from phase 1 all the way to funded. And also another idea I have in mind is how I come out of drawdown, let's say a challenge account or a funded account whatsoever. Let me know in the comments and we'll do it for you. So this is everything I have to say about risk management. First of all, you do have to have a profitable edge. If not, go through our YouTube channel. Make sure you join our public Discord. We share free trading education in there. You don't have to pay anything. Everything you have to know is in this YouTube channel and also in our Discord community. Join completely for free. Also interact with a lot of traders who trade on a daily basis, share their trade ideas based off the strategies we taught in the Discord. You can just learn together and grow as a community. Last tip for this video, don't ever buy a challenge you cannot afford to lose.